Hello and welcome everyone to the week ahead commodity report for the 8th to the 12th of April 2019, presented by myself, Phil Carr, at the Gold and Silver Club. And of course, we will be reviewing crude oil, gold, silver, and platinum prices for the week ahead. So over the last week, we have seen hedge funds and money managers yet again raise their net long positions in US crude oil futures and options in the last week, with US oil posting a 4.9% weekly gain, which is now the longest winning streak for crude oil since 2017. So you'll recall last week we did discuss that we were anticipating certainly April to be a very strong month for crude oil. Typically the gain over the month of April is 5.7%. Meanwhile, on Friday, we of course had non-farm payrolls data, and we did see gold pull back a little bit initially off the back of that data. We had a rebound in jobs growth in the United States. However, gold later on in the session, it did pick up momentum, just closing more or less where it started at the beginning of the week, around the 1290 zone, with buyers coming back in at 1280, where the data from the non-farm payrolls also pointed to a slowdown in wage growth. So with that, we'll move over to the charts and we'll talk you through some of the trade opportunities that we see developing as we go into next week. So firstly, let's have a look at Brent crude oil here. Now, of course, for those of you who watched our analysis last week, you will know that we had a long position on oil and we were expecting a move back up towards $70 per barrel. We've now hit our profit target there for 200 points profit, and as we go into next week, I do still see the potential for oil prices to drive higher over this month of April. Normally the average return is 5.7% over this month, but we have seen so far 4.9% gain just in the last week here. Now, where we're residing at the moment, we've come right back up to this key level of resistance. As I've mentioned before, a really very straightforward way for you to take advantage of the pullbacks that we've seen so far in the first quarter of 2019 on oil is to look at that 21-day moving average. That has also married up, as well as the midpoint of the Keltner channels, as a really nice area of support to look at getting back in. Now, note the previous week we did see Donald Trump tweeting that he felt oil prices were too high and for OPEC to take some action, and we did see immediate sell-off with oil prices. I would actually be on the lookout for any additional tweets from Donald Trump now as we go into next week, given that Brent crude oil has now broken out to $70 per barrel, and you've got WTI crude oil, which is now above $63 per barrel. So I would be looking at pullbacks as further buy opportunities rather than get in right at the upper end of the range here. But where we're poised as we go into next week, you can see very clearly next major level of resistance for Brent crude oil resides at $72.42 per barrel. If you take it out to the weekly chart, you can see very clearly where we've been building this V-shaped reversal, and in fact on the monthly chart here as well, which we've discussed going back to the beginning of January here, where we were looking for more follow through to the upside, and ultimately over this quarter, we would be looking for a revisit back towards the next major levels of resistance for Brent, which is around the 72.40 zone, and then the price coming all the way back up to the previous swing high, which is of course where we broke down from, going back to November 2018, where we had a breakdown from the $75 per barrel level. Now, moving over to the precious metals, let's go over to the weekly chart here. As we mentioned last week, we suspected that in the first week of the month, we are going to see dollar strength. This is often the case. From a cyclical point of view, the dollar tends to be at its strongest in the last week of the month and the first week of the month as well. And you can see that very clearly. The previous week, gold prices sold off. They closed around the 1290 zone. And this week, we actually had the rotation back towards the 1280 zone, which is exactly what we predicted last week on the week ahead report, that we would get a push lower to that level, but we would look for evidence of buyers coming back in. We did definitely see that a couple of occasions last week, both on Thursday and Friday. We've seen buyers come right back in at that 1280 zone to drive the price back to 1291 into the close. Now, I do note that overall hedge funds and money managers, they have trimmed their net long positions on gold over the previous week, but that data of course takes us up to Tuesday of last week, and we started to see the buying come in on Thursday and Friday. So the following week's data might actually show us an overall change in hedge funds and money managers potentially adding to positions after the pullback to 1280. So we'll be watching out for that once we have additional data on that. So where we're poised at the moment as we go into next week, what you want to note is that now we're starting to get through this period of where the dollar strength starts to dissipate. So normally as we transition into mid-April, this is where the dollar can start to pull back, and we could then see gold and silver potentially gain a bit of momentum. The average return for gold over the month of April is typically 1.3%. So it's not as strong as the months of January and February, but April is not normally a negative month month for gold prices. And we know, of course, over the month of March, we did see a pullback in gold here. So what we could see is gold continue to consolidate between those ranges of 1280 and up to approximately that 1295 to 1305 zone. So gold week to week tends to move within a 200-point range. So if we take, for example, the close on Friday there at 1290, support is at 1280, and then we're seeing resistance come in just overhead around the 1298 up to around 1305. I'm looking to trade within those ranges over the following week until I do see evidence of a clear direction on the dollar. The dollar did pick up some momentum on Friday after non-farm payrolls. I want to see whether that momentum will follow through to the upside, but regardless, gold is getting bought at 1280. So from an optimal trade point of view right now, it tends to be favorable to buy into gold around the 1280 zone and then looking to take profits around that 1290 to 1295 zone at the moment. Now, what I would look at as well going into next week on gold would be whether we can break above the weekly highs. So that would result in a break approximately above the 1297 level. If we do break above that level, you've got overhead resistance at 1300 and then 1306 above that. Those would be the next targets if gold was able to break above the highs there. Otherwise, we might just continue to ricochet between support and resistance, support at 1280 and resistance overhead around 1295 for now. So we're watching gold very carefully as we go into next week, but the expectation at the moment is that we could see just a bit of range bound trade for the time being until we get a clearer view on the dollar here as to whether the dollar is just going to hold resistance around the 97 level and potentially correct from there, giving more support to the metals, or whether the dollar wants to full on break out and start making a move to 97.50, which would put more pressure on the metals. Now moving over to silver, very similar in terms of the price action that we've seen with gold over the last week. We had a rollover back towards major support, which resides at $14.90 per ounce here on silver. You can see that was a previous major level of resistance going back to the last quarter of 2018. Now that level is providing support. We also have a rejection candle which has formed on Friday. Same principle applies here with silver as we go into next week as well. If we are to break above the weekly highs, that is where we could get more follow through and make a move back up towards the next major level here, which resides at $15.60 per ounce. Week to week, you tend to see silver move within approximately a 40 to 50 point range. So if we were to see a breakout back above that zone, that's the next level I would target in the short term. Typically, again, April tends to be a more supportive month for the metals. The caveat to that would be, of course, if we were to break below the 1490 zone, then we could start making a move back towards the next major levels of support, which reside around 1460 to 1450. But that's not the anticipation at the moment. If we do hold at this zone, if buyers do continue to support around the 1490 level, that's where we could springboard higher, or just remain range bound for now with silver prices. We also want to just keep a close eye on the dollar as to whether the dollar starts to dissipate the momentum from Friday's non-farm payroll, or whether the dollar is able to break above the 97 level as we go into next week. Now finally, moving over to platinum. Platinum has been the star here with the precious metals. It finally broke above that resistance at $875 per ounce. We've seen a clean break, taking the price all the way back up to $900. Platinum last week, we discussed that we were building up this pressure. We had this pennant formation in play. We also had an indecision candle on the weekly. We finally now had a resolution. So we've had a 5% move to the upside just over the first week of April here, which has really seen some significant follow through here above this neckline. We've had this W-shaped reversal pattern finally broken above the resistance level. So of course, going into next week, you've got resistance here at $915. If we were able to continue to push higher here, the next major levels that you really want to keep an eye out for would be around the 950 level. If we just keep pushing higher here with platinum, we might consolidate some of these gains from the previous week. I would also look at the potential for a retest of previous level of resistance, now turning support around that 875 level. That could be a good area to look at evidence of buyers coming back in with a view to then get long again and look for then a breakout above that neckline, taking the price back up towards the April highs of 2018. If you would like to join us at the Gold and Silver Club, you are very welcome to do so. As a member of the Gold and Silver Club, you get access to exclusive live trading room webinars. You also have real-time trade alerts delivered to you via WhatsApp and email, access to trading research and market insights. You have your very own Private Members Academy website logins, as well as access to support and one-to-one mentoring. So if you would like to find out more information about the service, very simply go to www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel as well. That way you're always kept updated with the latest commodity reports.